Yo, 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 ladies and gentlemen, what is happening? Good evening, everyone. What is good? Stefan, what's happening, my bro? Billy from Philly, what's good, man? Where you been? Samuel L, what's good, brother? What is happening? Derek D, what is good? Yes, ladies and gentlemen, we're going to have a conversation this evening. I've decided to come on a little bit sooner than expected. Bitcoin's made a nice little move to the upside. Now looking at retracing that bad boy move. We've had quite a bit of excitement today in cryptocurrency, especially in the UK, ladies and gentlemen. So we're going to be going into that flavor itself. Yes, listen, ladies and gentlemen, there are probably, I'm going to say it right now. Let me just kill the music for a second. There are a few people trying to pull off and impersonate me on Facebook platforms, Instagram, Twitter, you name it. Ladies and gentlemen, I will never reach out to anyone asking you, is crypto doing you well? Is crypto serving you? What are your returns like? Never, nada, nothing. All right? All you need to do is get them to tell you to send you a voice note and get them to sound like me. All right? Ask them what time it is, and they should tell you, because I will never tell the time on the live. So if they can't pull that recording, ladies and gentlemen, and play it back to you, and it sounds so obvious as well, so they'll go to any extreme. So just remember that, all right? Wicked. Let's get with the flavor, ladies and gentlemen. What am I doing here? What is happening, ladies and gentlemen? Good evening. I hope you're all doing well. Now, we've had some good news in the UK, ladies and gentlemen. It's been a good day in the UK, to be honest with you, given that Rishi Sunak right now has met King Charles and he's doing his duty calls and what have you, trying to get the UK up on its feet again, given that we are at a 40-year high in relation to inflation itself. But we've just passed a new law, okay, in relation to cryptocurrency. But when you read in a little bit more about it, ladies and gentlemen, don't get too excited. This law says that it allows crypto promotion to happen, all right? That means that any companies that are endorsing the idea of cryptocurrency, if they're not regulated, they're going to get penalized for it. And it's all going to be passed based on what Mr. King Charles says. If he's cool with it, happy days. Now, if we're going to be going into this endorsement of cryptocurrency, ladies and gentlemen, what's going to happen with cash? Let's look at it now. Is this new digital coin going to reflect or show King Charles's head on it? Maybe. What's the logo going to look like? All right, we ain't going to have no Dogecoin. All right, I'm not going to have no memes on there. That meme saga's done now, ladies and gentlemen. It's nipped in the bud. Finished. As I said to you guys earlier on in the live stream, the interest for stock trading is kind of going down in terms of Google trend, which leads me on to the next thing. Bitcoin is actually less volatile than the S&P and the Nasdaq. Wait there a second. GBP USD is now more volatile than Bitcoin. What's going on, Bitcoin? Is it all part of the accumulation phase? Is Bitcoin looking at getting up? Is it going to go? Is it going to break beyond that 20K range? Well, we're going to go into the charts very shortly, ladies and gentlemen. And we're going to try and understand what it is that Bitcoin is actually doing. But I've got to tell you, the narrative will always come back to play. Dollar dominance takes a nosedive to the downside. Of course, Bitcoin's making that lovely move up. ADA's made a nice move up. Ethereum has made a nice move up. Crypto overall has made a great move up. The problem is it's always going to be a problem if they make the move at speed and the narrative of what's going on around the world comes back into play. Word on the street says that institutional fund managers are actually picking up more Bitcoin. They're buying more Bitcoin. They're stacking up, but Bitcoin's trading sideways. Yeah, Bitcoin is starting to behave like that principle of the hedge against inflation. Look, ladies and gentlemen, Bitcoin tied to the dominance of the dollar. When Dixie goes up, Bitcoin goes down because any pair against the US dollar principally is going down when the dollar goes up. But Dixie's taken a nosedive today and Bitcoin itself has moved up. But recently, since dollar has been moving up, Bitcoin hasn't been dropping. It's stayed within that 1920 zone. So we're going to go into the charts right now, ladies and gentlemen, break everything down, and we're going to have a decent conversation. I'm going to check out some altcoins as well. because I know you guys want to roll with those altcoins, and we've probably seen some big movements on altcoins itself. So just be mindful of that. And we're going to talk you through a little bit of a strategy as well. All right? Wicked. Let's roll with it, ladies and gentlemen. Here we go. All right. Where's my little head gone? Where's it gone? Cool. There we are. All right, ladies and gentlemen. In front of you is Bitcoin. Great move, yeah? Happy days. Problem is, Bitcoin's only come back to the last point that it came to only last week. Yeah, on the 4th. Back when they formulated that resistance at the 800 EMA, and they just rolled over and came down and tapped down towards the 18.2 zone. We're in exactly the same spot, ladies and gentlemen. Just look at the way price is moving, guys. Yeah? I said this to you last night. Sharp move up, sharp move down. You only need to go onto the 11-hour time frame just to understand what's going on. What do you see? For every sustained move up, Bitcoin's taken a nosedive down. Why? Because we're going back to the narrative again. Short-term interest is favored. Yields have inverted. All right? That means they favor quick profits now as opposed to later on because they don't see the economy as looking good in the future. Simple as. So when you see Bitcoin make a big move up like this, so let's just look at the difference right now. This move that happened on Bitcoin over here on the 11-hour time frame, what is going on here, bro? Here we are. So this move, a 5% move in Bitcoin. All right? And then we look at this move. Near enough, it's 5.7, 6%. Okay? What does that mean? Well, look, Bitcoin's taken that at 200 EMA on the 11-hour time frame. Now, I don't know anyone that does trade on the 11-hour time frame. The reason I'm making reference to the 11-hour time frame is because there are vectors that we can trade towards. In the next hour and a half, ladies and gentlemen, the new 11-hour candle will be forming, and it's all going to be based on where this candle wick resides. If this candlestick can't finish closer towards the highs of this wick, then the start of the next candle will look to try and recover some of it, but might find a bit of a resistance, no different to what it did over here, and even here. So those price points, for anyone that may not be watching the live and they're probably driving, we're talking about the price region on the 4th of October, where Bitcoin made a high of 20,460 and took the nosedive down towards the 1822 zone. And then previously, where on the 27th of September, they made the move all the way up towards the 20,386. And then they reversed it and came sharply back down, and they triggered that 18,825 zone. All right, cool. Now, let's just do something else. Bitcoin on the smaller time frames, what do we see? Look, ladies and gentlemen, when price is trading sideways, when you see this spike up in the chart, it's not good. Why? Because it's where traders are losing their patience, okay? Traders are looking for direction. When they get that direction, they get their orders filled straight away. Mr. Market Maker has got them committed. Now, listen to this. An article came out not so long ago talking about the idea that $400 million worth of short liquidations have been hit. Oh, my days. That sounds like a lot of money, but they're not really giving you the bigger picture because it wasn't $400 million worth of short liquidations. It was more. Check this bad boy out. So let's just start off before the move happened. All right? $135 million right there. Okay? At 19,850. Let's move up a bit. $267 million worth of short liquidations right there. Let's move up a little bit more. $323 million worth of short liquidations, maybe a little bit more. $208 million, $406 million, $577 million. We go in a little bit higher, $457 million, and go up to $484 million. And we've also got $466. You get the idea, ladies and gentlemen. $400 million is nothing in this marketplace. That's the sad truth. We're just shy of $2 billion worth of short liquidations, even more. If we actually extend this chart out, go to the 7-day chart itself, you're going to see some very interesting figures and commitment of traders. Here it is. Look at this bad boy right here. First bout, $4.8 billion worth of shorts. Happy days. Next, $5.1 billion worth of shorts liquidated. 400 million means what? Nothing. So be careful with the sources of information. They are figures to make you feel impressionable. Okay, to get you to think, oh my God, that's quite a lot of money. Yeah, it's a lot of money. But when you're dealing in these markets, especially futures markets, where people borrow money to open positions, you're going to have yourself a little bit of a situation where you're reading one article saying 400 million, and that's not exactly the true figure. All right? Looking at this chart right now, ladies and gentlemen, you can see bright as day that a lot of people have committed liquidity. $5.7 billion worth of long liquidations are being advertised at the 18.5 zone. What event could send Bitcoin back into this zone? Because if Bitcoin is going to act as the hedge against inflation, then there will be no reason why we wouldn't welcome Bitcoin to come back down into this range. Even if you were to mark off Bitcoin like this, ladies and gentlemen, from this high. No, actually, let's not do that. Let's do it like this. Look at this. Let's just take this. What are you doing, bro? What's this doing here? Here we go. Look at this range, okay? Start with this one, all right? Look at this range. That includes the 18K range and at top side, the 20,400 range, all right? Bitcoin has no reason to come back, has every reason to come down to the 18.5 zone because that will sit exactly right there. And that will be in exactly the same zone that it has been trading from all week and the past 2 weeks. What I'm trying to say to you, ladies and gentlemen, you need to make a decision about the way you trade or invest, all right? An investor is going to be able to pick up Bitcoin whatever price he wants in this area. A trader is going to look to try and exploit the idea that a fast move up is going to lead to the false move, which means that Bitcoin is likely to continue to come back down, back into the fray, no different to what it's been doing all week, every time it makes a move up. Now, look. Bitcoin made the move up, trickled a little bit more, ripped back down and recovered the whole thing. Back to the narrative. Short-term interest. That's what they're doing on the inversion of the yields. That's the behavior of investors. Why is it any different in crypto? You think this has moved up because it's now time for Bitcoin to move higher? I'm not a pessimist in crypto. Trust me, I'm not. But what I'm trying to get you to understand is the narrative can be triggered at any moment. Look what's happening next week, ladies and gentlemen. Check this out. Next week, we have a bag of information coming out, okay? This is, of course, this week's data, but we're not going to talk about that. We're talking about next week, FOMC, ladies and gentlemen. These bad boys are going to be talking about the federal funds rate, talking about 75 basis points. Maybe not, because they don't want to do too much tightening to scare off the market and force it into a recession. Talking about 50 basis points. UK is increasing it to 75 basis points anyway. Canada's doing the same thing. Why is the US going to do anything different? I'll tell you what's going to happen, ladies and gentlemen. All the news articles that are coming out this week, financial data that's coming out for the dollar, is going to give us a bit of a heads up on what we can expect from the Fed going into the start of next week. So tomorrow, we got the new home sales coming out. Consumer confidence comes out today at 102. That means they're still confident. Look at the readings of this, all right? Survey about 3,000 households, which ask respondents to rate the relative level of current and future economic conditions. By principle, this says that people are looking optimistic about the future. Happy days. Does that mean you just go blindside and go straight into assets? Not necessarily, okay? Because we've got more information coming out which can actually help us understand how likely this move to the upside across Nasdaq, S&P, Bitcoin, and all the other assets, how likely is it being set up for a move to the downside? Let's look at the logic. Euro tomorrow has the main refinancing rate, okay? Followed by the policy statement. We're going to expect some volatility tomorrow at 1:15, followed by at 1:30. We have data on the US. Heavy data day tomorrow on Thursday for the US, okay? So principally, could we assume that if Bitcoin comes down or stays in this region up until Wednesday, Thursday, and rips lower on the midweek reversal? Or will it come down first to only come up? On the ideal that if news already is negative for the US, Richmond Manufacturing Index coming lower. It needs to be above 0 to be happy days. Well, it isn't. It's below. Okay? What does this Richmond Manufacturing Index say? It's like the Philly Fed Manufacturing Index and the Empire State Manufacturing Index. Okay? All about, here it is right here, look. Survey of 55 manufacturers in the Richmond area. All right? Above 0 indicates improving. Below indicates a problem. Now look. Bitcoin is back at that 20K zone, only back to where it previously sold off from. If any of you are running longs, as always, pay yourselves. Now, a gentleman earlier on said to me that I seem to be adding a little bit of urgency and panic to paying yourself. This is why, my friend. Look, people are leaving money on the table. These liquidation points only appear because people keep their money in the charts. Why? Why you give it $4.6 billion worth of liquidity gone? That's coming from many millions of people, even institutional traders, fund managers, you name it. That's people's money. The worst thing is institutional fund managers are taking people's money that are pooled together. It's not even theirs. What about the average Joe? What about the guy that's got 100K from his flip on meme coins? He's going to put it into crypto, put it into Bitcoin. What about the guy that saved up 5-10 grand to come and trade crypto, takes a long on Bitcoin or a short on Bitcoin? There's his money right there. Yeah, I do bang on about the idea of paying yourself, ladies and gentlemen, because it's the only way you're going to keep coming back to this stream and being able to trade the charts. Why? Because you still have money in your capital. I can endorse the idea Bitcoin's going to go up, happy days. All right? It's going to go down, happy days. You take the trades, cool, do what you want to do. I'm still going to come up on these live streams and just talk about Bitcoin. But I want you to stay in the game. What's the point in being here for you to lose money? The industry is designed for you to lose money anyway, ladies and gentlemen. At least let's give it a fighting chance. So the best way I can get that in your minds is to tell you every day, pay yourselves. Take the money and run. Some of the greatest traders in the world, and even in the past 100 years, ladies and gentlemen, they're happy to take the last 10% of a move. You might get a trader that will try and run along from this point right here, okay? Get rid of that. He might take a long from this point. Happy days. He's cool with that. He'll pay himself. He's not out to grab the best point or the actual low or the high. Don't look for it. Okay? Cool. Where are we at? What have we got here? Let's have a look at who's in the room with me today. Mad love and respect, ladies and gentlemen. Good evening, good evening. Someone just had an argument with someone. Someone I should be buying at 20,300. Right, listen, here's the question for you. How many of you are holders in the channel? Just press 1, quick time. Now, how many of you as holders have been enticed to buy Bitcoin right now? I would love to know that. How many of you are actually like, yeah, you know what? I think I should buy Bitcoin right now. How many of you are actually buying Bitcoin because of this move right now? This is what I want to know. This is what I want to know. Okay. How do they know the liquidation zones this precise? APIs. APIs. 111. Mike, stop pressing 1, bro. Okay. So, okay. What question did I just ask? I'm losing my mind, ladies and gentlemen. It is hot in this room. Anyways, we're bringing too much fire here, ladies and gentlemen. Anyways, listen. What I'm trying to get at, guys, is this. Whether you buy Bitcoin at this price or not, we've got to look at the bigger picture here. You have to be buying a certain amount. Only risk, in my opinion, say you have a portfolio, okay? Say you've got a portfolio of assets. Conventional traders, or should I say institutional fund managers, they like to do this. They like to split their portfolio 60-40, okay? 40% in bonds, all right? And the rest in stocks, okay? Commodities, Forex, you name it. Risk on assets. But the majority of it is in, well, most of it, safe-wise, is in bonds. They want bonds, all right? There's been a transition where they're now starting to offload equity and add more to bonds. So their ratio is actually increasing. More 60 bonds, 40 stocks, okay? JP Morgan's talking about offloading equities, okay? Now, listen. What you've got to understand is this. If you're going to start picking up Bitcoin, given that we've seen this move, okay? Whatever amount of liquidity you are using, at best, you only want to risk an amount that you can work with. In other words, if you get a drawdown, it's not going to break the bank for you to actually recover. And you've got to have enough money behind that position to be able to add to it on the point where you believe this is the time when Bitcoin's going to go up so that you can recuperate the loss by adding to the position. It's like DCA and what have you, but it's like a DCA trade at the same time, okay? Your dollar cost averaging into Bitcoin as it's dropping and dropping and dropping. But what if you've been DCAing for such a long time when Bitcoin was at 30K and now Bitcoin's at hypothetically 18K? You're sat and there scratching your head thinking, yeah, man, DCA to the moon. It's a little bit of a situation, isn't it? We've got guys in the channel that are actually peeking out and trading and taking trading profits and moving it over to their bag of Bitcoin. So it's all down to what you do. But you've got to remember, you've got to make sure that you've got flexibility with your capital. Do not buy all of your Bitcoin or buy as much Bitcoin as possible with the full allocated amount of risk on your capital. You got 10K, do not put it all into Bitcoin. It doesn't work. You need to split this up, okay? So that you've got enough flexibility to either trade or to either add when you're starting to see volatility. All right? The markets aren't stable enough yet, ladies and gentlemen. When you've got the S&P and the Nasdaq more volatile than Bitcoin, are you talking madness? It's not an environment to be trading. Let's have a look at what else has been moving today, guys. Ethereum. Again, no different to Bitcoin, okay? It's going to be doing exactly the same thing. We actually need to look at ADA for a second because I know ADA's made a nice big pump to the upside. Here we go. ADA. There you go. Look at ADA's move, man. ADA's completely recovered the zone. Remember that area we marked off, guys? It's come so close towards that 0.43 mark, coming back into the previous psychological ranges from the last week. Well, a couple of weeks now. That's a very interesting zone. This is on the hourly time frame as well. I want to look at XRP for a second. Why XRP, man? Why did you do this, bro? Not that much movement on XRP, and it's stuck in the psychological ranges. That is crazy. And it's near enough recovered most of the move from today. That's pretty sad for XRP, you know. Pretty sad. Let's have a look at gold for a second. Again, gold. Stabilizing. We marked this off last night, ladies and gentlemen. Stop hunt lows. Shift out. Consolidating. They could be setting up for tomorrow's news announcements, ladies and gentlemen. It seems as though that the news coming out for the US is pretty negative, okay? New home sales tomorrow might actually come in lower because the mortgage rates right now are too high for the US. People aren't going to be spending that money. That's why you've seen the existing home sales taking a fall and drop for the 8th month in a row. So that only tells me that people aren't spending money because they can't afford the mortgages. That means what? That could mean that the data that comes out this week in relation to durable goods orders or unemployment claims, and then going into, where is it, from next week's data? Here we go. Where are we? Average hourly earnings. We've got non-farm payrolls next week as well. Next week on Friday. So all of this data that's coming out is leading up to FOMC and, of course, non-farm payrolls. And I bet you they say something about non-farm payrolls, okay? They'll say that we're going to try and keep our adjustment to the interest rate based on what we see happening with the non-farm employments. I think that's what they're going to do. They did it one time before where we'd expected the FOMC to do something, and they said, we're just going to wait for a little bit more data. Nah, man, I don't like it. It's a waste of time. USDT chart itself, ladies and gentlemen, takes a nosedive to the downside, completely recovers all of this. That tells you what? Tells you that people have picked up crypto. Remember, short-term interest. They're going to want to take back that profit. They want to make some money off the back of this move. So naturally, you would anticipate USDT to come back up. Dollar dominance. We've got ourselves a little bit of a story with dollar dominance right now, ladies and gentlemen. Although it's still within the 10% region on the appreciation of the dollar itself, what we've got to be aware of is dollar dominance could be getting set up for a move in relation to euro tomorrow. Why? Because euro's got the main refinancing rate coming out on Thursday. Okay, where is it? Up here. Main refinancing rate on Thursday. That's going to be a big thing for the euro. All right? And if it's bad for the euro, principally, euro could come back down. But you've got vector candle regions. So there's going to be a bit of a story here because euro is now coming away from parity and close to being 1-for-1 on the dollar. That'll be good news for the euro. But it's all about pound sterling for me, ladies and gentlemen. Looking like it's showing the strength to come break higher, pretty much mimicking the euro itself. But remember, pound USD only makes up 9% of the dominance of the dollar, or the Dixie index itself. Euro itself makes up 55% of that index. So that's really important, okay? Moving forward, Nasdaq and S&P. Oh, man, look at that beautiful move. See, Nasdaq showing more volatility than Bitcoin, okay? This is really important, all right? Because it tells you what they're doing with stocks. Check this out. Where is it? Don't even like doing this, but here we go. This is Market Smith. Okay, this tells me exactly what the market is like. It is quite an expensive platform okay? It's really in relation to stocks. Now, this gives me a bit of an insight into what I can expect with the stock market on a day-to-day basis and in real time as well, okay? Nasdaq is up 2.25%. What is this guy saying? Volume's only up 5%. Given that it's had a big move, it's not that great. New York Stock Exchange volume is only up to 0.25%. And S&P and Nasdaq and Dow Jones, they have got marginal accumulation days. Volume doesn't look like it's been above average. If I actually relaunch these charts right here, ladies and gentlemen, if we actually look at the way Nasdaq has been behaving, it's going to be pretty interesting. And we're also going to look at Nancy Pelosi's stock right now. I'll show you that in a second. So look, Nasdaq showing that volume is above average, okay, on the daily, which we will see that they are now going to be talking about the market could be following through again with a confirmed uptrend to the upside. Volume has been rising sequentially on this chart right here for the daily. But we've got the refinancing rate coming in with the euro. We've got the FOMC coming out. So from now up until that point, something in the marketplace could actually trigger a drop down to the lows and retest this region of the 10K zone. We're coming into the 50 EMA movings, 50-day moving averages, 200-day moving averages as well. So that's really important that we pay attention to that. But let's just have a look at Nancy Pelosi's stock. How's that bad boy been doing? We looked at it last week. Ha! Look at that. Happy days. Shifting out, ladies and gentlemen. It's a good little stock, that is. She picked it up, I think it was about 223 in this zone right here. I think it was 10,000 stocks, 10,000 shares at 225, I think it was. Now it's shifted out to 259. She's sitting happy days, ladies and gentlemen. Let's just have a look at the S&P as well. This is going to be helping us. Here we go. So the reason why we're looking at this, guys, is because this is only going to dictate what Bitcoin does next. Now, look, S&P volume is not above average. Now, Bitcoin has a 71% correlation to the S&P. Nasdaq naturally is going to be volatile anyway. But if the S&P is not showing the commitment of traders, even though volume across the board is showing that there's 757 stocks up on volume, it looks like most of that was tech stocks. You want the blue chip, you want the big companies, the companies in the S&P to be moving up. Doesn't look like that's happening, which is giving me a cause for concern as to believing that this move might not be sustained. Hopefully it is sustained, ladies and gentlemen, but we've got to be very cautious with that. All right? I think tonight, guys, when it comes to the Asian session, you've got to be really careful with Bitcoin because Asia has the tendency to just do the dirty. Remember what we saw last night. The last two Asian sessions in Sydney, they initiated a stop hunt rise. They ripped price down lower. They did it at the start of the week as well on the Monday. Where was it? I think it was here. No. Yes, it was the start of the week on Monday. What day are we on now? It's Friday. There it is. Monday here. This zone right here. Stop hunt rise. And then they ripped it over to the downside. Sad days. That's what I don't like. I hate it when they induce and then they trap people and people don't pay themselves. All right? So just be careful in tonight's trading in Sydney tonight, ladies and gentlemen. I'm going to love you and leave you. If you are new to the channel, be sure to like and subscribe and all that flavor. We'll be doing another New York live stream tomorrow, ladies and gentlemen. And if you haven't done so already, check out the Traders Reality website so you can download this indicator free of charge and then get with the pattern watchers in the Patreon community as well, because that's where the fire begins. Ladies and gentlemen, it's been a pleasure. Mad love and respect. Peace. Where are we going? Happy days. Ha!